What's up, guys? Today, we're just gonna basically go over how my green streak ended and how it ultimately led to pretty big red day. Not gonna lie. So just like background information, I've been up 9 days in a row consistently trading. Green days, around like $200 a day, whatever. And in like 2 weeks, I was up like 2K. So basically, psychologically, what this does is it kind of creates overconfidence, which, I mean, it's good to be confident when trading, but when you're overconfident, basically every single trade you take, you think it's just going to go in your favor no matter what. That if you hold through your stop loss and whatever, it's still going to go in my favor. Oh, I've just been green, blah, blah. So going into the day, I was pretty confident, I guess overconfident. And I took some setups that were okay, but it shouldn't have been that big of a red day. So let me just show you right here. As you can see, lost $544. Basically, all of this week's profits. Last week's profits, I'm still green. So I'm still green in the past 2 weeks. So let's start. All right. So before market open on my Instagram, I signaled Apple. I said Apple above 150 looks very good. And I was like, watch out, this could rip off the open. And so I took it off the open. Okay. So if you look here, obviously, the 150 level was a resistance in the pre-market. The ATR trailing stop has this as a resistance level. So there's a lot of multiple confirmations that if this breaks, this thing's gonna rip higher. Okay. So right when the market opened, I hopped in at 9:30. This is a 2 minute chart. So 9:30, I hopped in, and I was chilling. It started pumping, and then it went below 150, and then I was like, all right, this just went below the level. Let me just get out. So then I sold, and then it pumped right back up. So I was like, okay. So now you're a little mad because you see this green candle start forming. And you're like, oh shit, like this is gonna go higher. What am I doing? Let me get back in. So that's exactly what I did. Right when this candle opened, I got back in. Here's where I messed up on though. I got back in. I was up a good amount. Not crazy. I think I was up like 5%. I got in at like around here, the 150 area. And then kept pumping, and I like to take profits around 15% on the options. So it wasn't there. It was almost there. I think it hit like 13% at the top, and then it started pulling back. But I had no sign to sell because my strategy, I just would not sell this yet. This thing looks strong on all time frames. I should be holding this. So this stopped me out right here. I don't know why. I got scared. I was like, I already started the first trade off red. Let me just get out. So then I got out here, and then as you can see, this thing just kept running the whole day. And okay, so me seeing this now, I'm mad. So like I'm like, all right, I called this out, and I'm losing money on this. How is this even happening? Like, what am I doing? So at 9:45, I entered back into Apple. So what I was seeing basically was the break of 151. So I saw that we rejected it here, and then we started to break it here, and then at this candle is when we broke this level. Also, at the same time, I entered SPX at the same exact time, 9:45 a.m. 9:45 a.m. This candle happened. I saw that we were breaking high a day. Candle, very strong green candle. And the thing about SPX, sometimes it'll have one strong candle break a high a day, and it just keeps ripping higher. So I'm like, all right, this looks perfect. They both look amazing. Let me get back in both of them. So I got back. So I'm back in Apple, and I'm in SPX. So then what happens with Apple is Apple comes a little higher, and then it gets right back below this level, and then I sold. Took a 6% loss on this. When in reality my stop loss is around 10%. Had I held, would have been green. Two of my Apple trades would have been green. This one would have been red. It's all good. All right, moving on. Now if you look at SPX, so now I'm out of Apple and I'm down a good amount. So I'm mad now because I'm like, I called this out. I keep losing money on this. Let me make this all back. I have my green streak. I can't let this day go red. Even though I was already there, I was like, let me try to get out of this red day. So I'm in SPX, and then SPX just kind of consolidates. Doesn't really move. Keep moving between this area, and I'm like, all right, it is what it is. Okay. And so SPX goes really high green right here. And what I did is I bought another contract, so I doubled my size. So I'm in double the size of I usually take, which is I shouldn't do that. Like, what am I doing? Like, I'm just gonna lose even more. So I literally bought the top here when I added my second contract, and this thing just moved down so fast that the option contract got destroyed, and I sold for a 10% loss. This I can live with. I'm fine with this. Whatever. This is choppy action. This thing could have just went lower, and it did. I would have got like destroyed here if I held through this. So I'm not mad about this. I'm just mad that I doubled up in size. Here's where it gets worse. At 10 a.m., right when I sell here, and I see that it's like, all right, still between this range. Maybe it's gonna bounce off this 45.80. I bought a contract, a call option. I'm like, all right, this thing has to go up. And this was just blindly bought. I don't know what I'm doing here. I don't know why I bought it, what I was doing, what I was thinking, but I bought it because this was once green. So once this was green, that's when I also bought it. And then I kept holding, held through this, and then right before this candle opened, right when this was all red, I sold right here, and then it bounced, and now I'm like, all right, I literally sold the bottom. And then it pulled back, and then it went higher the whole day. So basically, moral of the story is that you should be confident in trading. You should not be overconfident. And I have to understand that these market conditions, today's market is not. Buying the breakout was kind of difficult today. There's a lot of choppiness, a lot of choppy action. But here, 10:30, we kind of made a little run up here. But the biggest issues and takeaways I'll move on with is that I should never size up double the size. Okay. Second thing is I was in SPX and Apple at the same time. They're both long. I should have reduced my size if I was going to go into both of them. I don't know why I took my normal size in both of them because Apple follows the market pretty closely. So it's going to move exactly where SPX moves. So that was an issue there. And then just the original Apple trades, they were just managed so poorly. And yeah, overall should have been a small red day, $200, $250, but ended up being this big, especially because I sized up right here. But it is what it is. So yeah. So tomorrow's Friday, 0 DTE. It's when I size down because they're just more volatile contracts on Friday. And hopefully we bounce back from this red day. So thank you for watching. I'm going to start making more YouTube videos. It's kind of fun making them. And it helps me, helps people watching. So I'm going to just keep doing it. So yeah. So I'll see you in the next one. If I don't procrastinate and not make one. But we'll see. All right.